just be like, oh, this is the...
All right. Hey, everybody. I'm Ben Hakes.
I'm Ian Shipman, and we're happy to present the Bitcoin Open Blockchain Meetup event
For the Bitcoin and Open Blockchain community here in Chicago. We've got an awesome event today. We're hosting Julie Winkler. Julie is the Chief Commercial Officer of the Chicago Mercantile Exchange, and we're here to talk about Bitcoin futures.
And right now we're just setting up for the event. So we're gonna leave the camera rolling for about half an hour while people filter in. And if you didn't see, look in the description for when the actual event starts. See you in 30 minutes.
tape sticking out there. Hello, testing, testing. All right, thank you everybody for coming out. We are going to get started in about 5 to 10 minutes, so why don't you grab drinks, whatever you want. We've got back there, and then, like I said, 5 to 10 minutes, we'll get rolling. Also, pizza is coming. I know you're all hungry. I know you didn't eat this morning, no breakfast, skipped it because you love pizza that much. So we'll see you. We'll see you guys back on in about 5 minutes. The other thing, we are live streaming it today, so if you wanted to roll back some of the questions, or you just really want to replay that really good question that you asked, you will be able to do so on YouTube. So see you guys in like 5 or 10. All right. Everybody ready to get started here? That was like kind of a question, kind of not. Yeah. Welcome to this latest installment of the Bitcoin and Open Blockchain community meetups. I am, for those of you who don't know, my name is Ben. I've been co-organizer here for a little bit. We are missing Hannah today. She is on the beach somewhere in Mexico. I don't know. I think it could be. But yeah, we don't feel bad for her. And then we've also got someone helping us out today, Ian.
Hi, everybody.
Ian Shipman. Ian is helping us out, and he will be the person that will be cutting off our 1 or 2 lightning talks today. Very strict 2 minutes of talking for those lightning talks. So first of all, I'd like to start off by thanking mHub. This is an amazing space. We love being here, and so we want to thank Bria and the mHub team. We also want to thank our sponsors, Athena Trade and Distributed Markets, for helping us support us. So just if you guys aren't familiar with Bob is a completely volunteer-run organization. And so any donations you may have been able, I saw somebody actually donated a Bitcoin, a physical Bitcoin coin, so thank you. And yeah, donations are appreciated. So if you want to donate, please reach out to me or Ian after the talk. So pizza is coming. I know all you hangry folks out there are gonna just hold off. We'll be here in like 20 minutes. So we got peace coming. We also did get vegan for those of you so inclined. And so we've got the space until about 6 o'clock. So mingle after the talk and enjoy yourselves and make some friends. All right. So we have a surprise. This is amazing. Amazing surprise. We are giving away an open dime. I don't know if you're familiar with what an open dime is, but you don't need to be, because all
you have to do is look underneath the chair you're sitting in. And we are, by the way, we are also giving away a raffle prize, which will be part of a lightning talk. Oh, we got a winner over here! Woo! All right, what did you find?
1,200 bits.
We found 1,200 bits over here, folks. Can you believe that's $12, give or take? If you're interested in open dimes, we've actually got some more. They're actually really cool. They're actually just a physical hardware device that stores a private key and a public-private key pair, and can basically there's a hole that you can puncture that basically allows you to access the private key, and without that puncture, you know that the private key is safe. So yeah, that's pretty cool. Also, did anybody find anything else? Anything else? Anything else? Oh, we gotta search for more chairs. Oh my gosh, this is funny. This is kind of funny to look. This is like a mass baseball game, when the ball goes into the stands. People are looking.
If you find it, yell, "I'm a winner," so that we know to stop looking.
Nothing. Oh my gosh.
Let me check over here again.
To be clear, it's a ticket. There's a ticket.
Blue raffle ticket.
It's a blue raffle ticket.
There we go.
You found it. Wait. All right. So that actually brings me to our first lightning talk, which we'll talk about what we just gave away. Okay. All right, Chris, why don't you come up? All right. Just a reminder for everybody: the lightning talks are 2 minutes. We will. Ian is very strict, and he will cut you off if you go over 2 minutes. So with that, why don't you take it away, Chris?
Awesome, thank you. All right, so my name's Chris, and I just wanted to share a new project that I just started called the Crypto Key Stack. It is a stainless steel backup device for storing mnemonic phrases and private wallet keys, and it comes with an electric engraver. So it starts for $45, and it's really useful if you have like a nano ledger or are doing paper wallets, so that it's fireproof and waterproof. Because right now a lot of people are taking their nano ledger, which is a plastic USB drive, saving their most important information on a piece of paper, which is the code, and then if anything happens to that, you're really in trouble. So this device is able to back up all of the information that you need in a physical sense, so that it's extra robust. So it comes with an electric engraver, so you're able to control the process from start to finish all by yourself. They are selling online now. It's in pre-sale until the 26th, so I'm doing a special offer for anyone here today or watching. If you put in the code Chicago, you get free shipping. So this is what it looks like when it's opened on up, and we're done. So it's got 24 words. You're able to just engrave it right on there. Each plate takes about 2 to 3 minutes to engrave. Thank you guys very much. What's it called? It's called the Crypto Key Stack. And CryptoKeyStack.com.
Thank you. The next talk will be in 35 seconds.
So do we have our second lightning talk for today?
I'm a lightning talk. I don't know what order I'm in.
Okay, yeah, come on up. Okay.
Hi, I'm Kyle. I'm opening what, as far as I know, is the first cryptocurrency merchandise physical store. I'm opening up in Rosemont Fashion Outlets on March 9th with plans to open up in Woodfield Mall in May. We're selling cryptocurrency merchandise, t-shirts, hoodies, books, and Trezor hardware wallets. I've talked to Chris, maybe some of the crypto key stacks. That would be pretty legit. So I'm actually thinking that it's going to be a good opportunity to get people involved in the space. help people sign up with Coinbase, obviously, and teach them more about what this whole space is. I think there's a lot of people who are skeptical, maybe afraid to go deep into the dark interwebs and find out what cryptocurrency is all about. I want to have a place where people can come talk to a real, physical individual, see the credibility of the space with merchandise. So actually, I'm here today looking for people to work at the kiosk. If you have a sales background or passion with cryptocurrency and the ability to educate people in this space, I'd love to talk with you and meet with you. So please come see me. I'm also looking for designers. If you want to design clothing or artwork, I can put it up on my website and give you a percentage of all the sales that sell with your design on it. So yeah, come talk to me. I'd love to get to know you. CryptoKiosk.com.
Okay, cool. Anything? Was that it? We have another. We had. Sorry. Yeah. We had one more.
Hi. Hi, I'm Joshua Herman, and I have a project called Django Blockchain. It's available on GitHub on the Apache 2 license, and it allows you for integration of a Web3 Pi Ethereum with a Django. Currently, I have a basic functionality, but I plan on adding more functionality. It's available on a quick link would be bit.ly/DJBLK or just GitHub Django Blockchain. Available also for consulting opportunities. Contact me afterwards.
Okay. Thank you. All right. So with that, we are now officially into our fireside chat time, and we actually couldn't. We looked into getting a portable fire delivered here. I guess it's against code. So we have our fire back there, and with that, I'd like to introduce Julie Winkler. Julie is the Chief Commercial Officer of the CME Group. She leads the company's sales, product marketing, research, development, data analytics, and digitization functions, as well as its innovation lab. So without further ado, let's get a round of applause for Julie Winkler. All right. This mic is hot. Okay. Thank you, first of all, Julie, for coming. We've been very excited and enthusiastic about the fact that we have one of the CME, one of the first to release Bitcoin futures, and it's based here in Chicago. So we're very excited about that. So without further ado, I have some questions for you, and we'll get right into it. And then afterwards, we'll do questions from the audience. So after we're done, we'll have Ian go around. So look for Ian if you have specific questions. Okay. So can you give us a little bit of background just on the project itself? And for those that are less familiar with futures, can you just give us a basic kind of product spec of the Bitcoin futures project that you have?
Sure. Maybe just good to first explain a little bit what a futures contract is. It is a derivatives contract, which just means it derives its value from another asset. And in the case of Bitcoin futures, that asset is Bitcoin. So the good thing about futures is that it's very standardized. So for us, our Bitcoin futures contract is for 5 Bitcoin. It has standard expiration, so the contract is trying to look at a very specific quantity of Bitcoin at a specific point in time. And it really provides a forward price curve. So you can actually look all the way out to June of 2018. And if you look at our futures prices, it will tell you what people believe the price of Bitcoin will be at that point in time. And again, it's there to be able to provide people access to the price without actually holding Bitcoin. So our contract is cash settled. It's not a physically delivered contract. But again, it reflects the price of Bitcoin through a reference rate that we created a little over a year ago.
Okay. So I think there are two things. Obviously, the reference rate. I think we'd love to hear a little bit more about the development of that, and also your decision to go with cash settled versus physically settled. But maybe talk a little bit, if you can, just how much you can about the process of developing this product. At what point were you saying, okay, this is interesting? There obviously was a transition period. You're like, oh my gosh, that's absolutely a crazy idea. To oh my gosh, this actually might work. So can you talk a little bit about that and like how the product itself developed?
I think it was probably a good way to describe it. We have been looking at this space for well over 2 years, and it really started, it wasn't very much a grassroots effort for us at the exchange. So we had a number of folks that just had interest in Bitcoin. We're mining, we're saying, this is going to be an emerging space. This is something that we should pay attention to. And they actually came together in our innovation lab, kind of similar to this space, and just started to think about it, both in terms of what are all the things that CME could be doing in terms of blockchain, distributed ledger, the actual Bitcoin and digital assets. And the emergence of the idea around we really could put a futures contract on this at some point in time. And it really kind of started to germinate again with a very small group of people. They were not necessarily people that were the typical people on my team doing product development work, which made it kind of exciting. And the first thing we kind of thought about was, are there some prices out there that we could use as a reference rate for a cash settled instrument? And that was, again, kind of a first step for us. Obviously, holding physical Bitcoin is a little bit more difficult for someone like ourselves that is a highly regulated futures exchange. And that's when the journey kind of started, is saying, okay, well, there's so many spot exchanges out there. How could we work? Could we find a partner that had relationships with some of these spot exchanges and actually do this reference rate? So that work started really back in early 2016, and the reference rate with the 4 exchanges that we're using now was first distributed by CME and our partner Crypto Facilities in November. So it followed, I would say, a little bit of a different path because it was something that was just kind of some ideas of some of our employees, but we had to look at it in the sense that we had to wait to launch a futures contract until it had adequate size. And that was really kind of when things got serious.
So yeah, okay. So let's talk a little bit about that preference rate and how you went about, not only finding the spot exchanges that you wanted to take on, or that you thought were good. Like, was that again driven from your team, or were there people outside saying, hey, we want to help you develop this?
We relied heavily at the beginning with our partner from Crypto Facilities, and they already had a number of relationships with existing spot exchanges and data agreements with them. And through the work with Timo and his team at CF, we really were able to start thinking about what is the best type of index that we can put together. And so from our perspective, in order to introduce a futures contract, we need to ensure that that price isn't readily susceptible to manipulation, and very regulatory-like words, which basically means it needs to be a trusted and credible price. And to do that in today's world, when there have been a lot of different financial scandals around cash settled products, we wanted to ensure that we had something, very tight rules around that. We have an independent oversight committee that really kind of helped us in developing that index methodology. And then it comes down to, like most things, a lot of back testing, a lot of ensuring that there were actually going to be enough transactions that happened in that reference window, and that we felt really confident that we had the rules in place and multiple conversations with our regulators to kind of prove the merits of it. But we have thousands of cash settled contracts that we trade, so we kind of know how to do cash settlement. But in this case, we needed to really find the right partners, both in the spot exchanges as well as our calculation agent.
So so that's helpful background. When I'm when I was sort of doing my own research on this, I was wondering, like, was there a specific like cash flow product that you specifically went to? You were saying, hey, that's what this looks like. Is there something that you modeled? Is there a product that you modeled this Bitcoin futures off of, or was it so? Was the relation, the way it came about, and the way and how it developed internally, did that make it different for you guys?
It's certainly the most unique product that I've ever worked on, and been doing product development for over 20 years. I would say the initial viewpoint was this kind of looks like an equity index product for us, so an S&P 500 or a Dow Jones Industrial Average futures, because it had similar characteristics. It still, was settling based off a reference rate. But yet there were other contracts that I think it had some similarities too, and it was actually quite a ways into the development that I kind of took a step back and said, this kind of feels like the emissions market. So people can kind of remember cap and trade and the pollution credits that people can get. And what made that product similar, right, is that it was, created in this case by a government. There was a limited supply of these certificates that were made available. They were issued to people, and then there was a secondary market developed around them. And, people remember back in those days, this was 05, 07, there, also were a lot of these registries that were subject to tax. These credits were being stolen. And so I think as we thought about the product, it was very important for us to say, we have to bring the best that we can to bear to the futures market, as we do with all of our other products, but the cash market is separate, and that is not for us to regulate. That is, what the underlying asset is, but neither our regulator nor ourselves are in a position to, monitor everything that's going on. Our job is to ensure that our product is, reputable, follows our rules, and, meets the regulatory standards.
Right. Okay, that's awesome. So it sounds like it was never up for discussion whether or not this was physically settled in the sort of internal talking with CME. It was not like, we don't want to touch them.
There was definite talk. There were a lot of potential clients that were interested in it. I would say, my personal preference is that if I ever have a choice between a physically delivered futures contract or a cash settled, I like physical, because that forces that price convergence between that underlying asset and the futures market, really better than anything else. And we've been designing futures contracts in that way, for over 150 years. We have that down. But in this case, handling the actual Bitcoin is, had some additional risks, and for us, it was not the easiest way to start entering into this marketplace. And part of us just even introducing the index was to say, hey, this is something we wanted to explore. So even when we launched the index, launching a futures contract, it's kind of like putting our hand up to say we're interested in this space. But we also use that as an opportunity to talk with, potential clients and say, what would you prefer? And there still are clients today that tell us we would, like in the future to see a physical contract.
Yeah, that makes sense. So let's talk about where product development, with now that you've got this space. Do you see that the product, the cycle, or the sort of phasing in of the reference rate, of a new reference rate for something, another cryptocurrency, or maybe, would you see that as being sort of the way in which you're going to develop products in the future? Sort of bringing in a reference rate, saying, hey, we've got this, does anybody, does it work? Are people interested in it? Like, do you think that that's the model that you take going forward, or do you think that that was just different because it was the first time you did it?
It's possible that that's a good path for us. We have found, with the contracts we're trading today, that we've now been through 2 expirations The reference rate has performed extremely well. We've seen a lot of transactions in that settlement window. And, that gives the market additional, comfort that it works. And so for us, we've had, ongoing discussions with looking at other, other cryptos and putting indices out there. Usually for cash settled products, people are going to want to see, you're not just going to launch the index and launch the futures right away. They're going to want to see for risk management purposes and be able to do some back testing on their own. So for us to get into other cryptos, it's likely that we would put out the crypto index first. Not necessarily saying that it's going to require the whole year that it took us before we launched futures on Bitcoin. But that is, a fairly natural part of it. The other difference for us is, we're a futures market that while we run 24 hours a day, it's just 5 days a week. And so we had a number of changes we had to make because, as you guys all know, Bitcoin continues to trade through the weekends, and it's often the time when
Bitcoin doesn't sleep.
Right, it doesn't sleep, but the exchanges do, and so that required a lot of adjustments on our part to even design a market data system that we could continue to publish that real-time index and the reference rate on the weekends, and to figure out on 3-day weekends when there was a lot of price movement over the weekend, what price were we going to use as that seed price when we opened up for trading on Sunday night. So it was a great challenge for us because it's required us to kind of come up with some new innovations along the way to adjust to this market. And so I think that actually is a good thing because it's pushed us in new ways that we would not have otherwise done it, and then now allows us to say, are there other spot markets that it makes sense to introduce something like this on?
You're welcome. There was a nice tweet by someone just right when the futures open. It says it's a guy in jail. I think it's from a movie, but he's basically like, you're stuck in your movie, like Bitcoin. Welcome to Bitcoin. And I think everybody gets that once they, on a personal, but also on a institutional level, when they come into Bitcoin, it's like, wow, it's just consuming. It makes you, rethink about where you are and what you need to do to improve.
Well, to that point, we deal with a lot of, many of our clients are the large banks, and it's funny because you will talk to many of these guys and they will sit there in their spare time during the day and have Bitcoin in their wallet and are trading, but yet here they work for JP Morgan and other large banks.
Oh.
And, they're bosses, right?
Don't say who that is, right?
But I think my point of view, right? It's just because it does not sleep. It's kind of the ultimate trading vehicle in that sense.
Yeah. I know that it's not, you may not have a great sense of, and obviously we can't know for sure and wouldn't say if you could, but do you have a sense for what type of organizations are using this futures contract and what their use case might be right now? Do you have a sense for where you see opportunity for more people to use the futures contract to hedge? Do you have a sense for that?
Yeah, it's very early days. I mean, we launched in December, so I'd say where the market will evolve to, is something that we hope again that it matures and we continue to have a diverse group of participants. Right now, a little less than 30% of our contract is market makers, and those are typically proprietary firms that we contract with to provide two-sided liquidity into our markets. But we have, other proprietary trading firms that are active in the contract, funds, you kind of name it. I'd say it's been interesting even just through this process and talking to, again, what we all kind of say is a typical institutional investor. And 6 months ago, their investors were asking them, do you have any exposure to virtual currency? And the answer was always, well, no, of course we wouldn't. And now the expectation is that if they don't say yes, or at least that they're looking at it, the investors are kind of questioning them. in some regard. And so I think it's still very early days, but what makes virtual currencies extremely attractive to institutional investors is that it's not correlated to other assets that they are, that they're invested in. And so that source of, again, additional returns and alpha is very attractive to them. And so that's why they are starting to do it. That's why they are looking for people like the CME to be offering products with exposure to this, so they don't have to, again, set up the infrastructure, have wallets, things like that, but they still want access to, again, something that's a little bit unique to other financial instruments that can be invested.
Yeah, the correlations on, and obviously the returns on assets like Bitcoin have been fantastic and have been an amazing portfolio, attribution asset. And so, yeah, I mean, it's cool. I mean, people should be questioning, like, why don't you have exposure to this? Can you talk about ETFs and, like, some people will say, especially in the ecosystem, like, okay, futures are the front runner for an exchange traded fund. Can you just briefly, is that true? And can you briefly explain why that may or may not be true?
I would say in most financial markets, what you want to be seeing is different types of instruments that people can, that perform price discovery, but also that people can arbitrage amongst. And I think that's what we're starting to see emerge with virtual currencies. There's obviously a lot of different spot exchanges out there, but there weren't a lot of other instruments that people could invest in. So whether it's cash treasuries or equity markets, when you have different instruments, ETFs or cash treasury bonds, alongside the futures market, alongside OTC trading, that creates a lot more, opportunities because different people have different access to those markets, and some people's main job is just trying to keep those prices aligned. And so, we would welcome other financial instruments to be introduced alongside the futures, and obviously want to continue to see the spot market grow, because I think that ultimately leads to the most healthy ecosystem.
And speaking of that, so with the current state of like the sort of dominance of the spot market, obviously there are other types of commodities and other types of financial instruments in which the futures contract absolutely is the contract, right? Can you what do you compare your success relative to some that many people are a lot of liquidity and a lot of volume is trading through the futures relative to the spot market, or do you just see this as like, hey, you just want to continue to develop the futures contract more? If the spot market grows, that's great, but we just want to focus on what we're doing.
They have to grow together. What we have seen, certainly it can change over time depending on other trends. I would say that agricultural markets, which is just really kind of where Chicago sits in the middle of it and where it all started here, those futures markets, so whether it's corn or soybeans, they are the source of price discovery to your content. And trade significantly more as a multiple of what that cash market does. Treasuries have changed a lot. Treasury futures, which we also trade, a great benchmark for us. This used to be about 55% of the cash market. Now they're almost 90%. And in some cases, at some points on the curve, they're more than 100%. So I'd say we certainly monitor the spot market and our relationship to them, but I'd say across asset classes, those relationships are just very different. Sometimes it's a multiple of, sometimes it's a smaller percentage of. And again, I think if they all grow, that is going to be a positive. I think right now, there's probably still just a bit too much fragmentation in the spot market. I think, in the years to come, we'll probably see some more consolidation among the players that are out there, which is, again, typical of what you see in other financial markets as well.
So I guess, if you could I'm curious to hear your take on whether or not you think, and I have no idea, do you think that like so far you've been successful? Have you hit your sort of targets when you set out the reference rate and then you were like, okay, we're gonna actually do this? Like, has the volume been what you thought it would be? Or, give us some sense of where you think you are relative to where your expectations were, at least when you were like, okay, this is an idea we actually think it's a good idea.
Right. For us, it was less about sitting down when we decided to go ahead with it and said we would need, X volume to make this worthwhile. For us, as we looked at this space and saw that it had reached critical mass, it was a matter of saying, we have clients that are coming to us saying that they need a tool and they would like to see some price discovery. They want to be able to hedge some of their risk. And we've seen good growth. I mean, we're trading about 1,500 contracts a day, so on a notional basis, that's about 82 million, which is good. Open interest is over 1,500 contracts. We've had open interest, that means people holding positions overnight in the futures contract since the first day in all 4 contract expirations, which typically that is not what we see out of the gate. I mean, sometimes we can, beg for, 1 deferred month of open interest. And for something true, also in a spot market where there's no forward curve at all, that's actually one that I think we've exceeded our expectations on, which I was not expecting. And I think the key thing is that we have seen over 1,000 unique participants that have come into the marketplace. And, we made the announcement, I think that day we had 10 times the web traffic. The crypto traders were like, what is CME doing and why are they
You got shut down, I think, right?
No, that was SIBO.
Oh,
Our
SIBO.
website has always been like,
Okay. Were you at all caught off guard by SIBO's announcement? Because I think that the community was obviously focused on your, was that at all a surprise to you?
They were out in probably August of 2017 saying they had intentions to launch. So they actually were out publicly before the CME was that they were doing it. We had, had the reference rate out there, been talking to our regulators and talking to clients about contract design, and did not make a formal announcement until late October. So we both knew each other were looking at this space, and again, I think competition and those types of things is a healthy thing, and is making the marketplace a better one.
So let's picture we're sitting here, 5 years from now. Do you still see this as being a niche market for you? Do you think your competitors are different? Do you think, is there a major event that say if this happens, this is going to become, a significant product line for us? Significant part. What are you thinking about over the next? What would you say in 5 years? What do you think if we had the same conversation? What might we be discussing?
I think there will be more products at that point in time. I think we will.
Would you like to announce one today? Everybody's got their phones and computers ready to buy whatever
Whatever
you're gonna announce. Yeah.
Probably not.
Okay. All right.
I think we'll have, there's been quite a bit of interest in options. I think we will see options. I think, ETFs. I think we'll see other financial instruments. There will definitely, I think, be more diversity of instruments. Quite a bit of interest in, a currency basket and a basket of cryptos.
We actually just talking about that today. That would be very attractive from a cryptocurrency basket, or a sans Bitcoin cryptocurrency basket.
Yeah, something that again I think can broaden that exposure. For us, I think this is just the start of other experimentation that we intend to do in the space. There's a future, I think, in almost digitizing all of the commodities that we trade in some regard. And, this was just for us a first step in getting the contract out there. And I do think that we will see, more institutional investors get into the space. We will see, more products, more activity, some of that consolidation I talked about. And I think we're going to see more regulation. I think that's kind of the inevitable part of this. There seems to just, there's a lot of focus on that now. It has been, some regulators have been, I'd say, more ahead of the curve than others. I was surprised in our, discussions with the CFTC, that they were very well versed. They've been learning and talking about this for over 3 or 4 years. This stuff wasn't new, although that's kind of some of the perception that it was.
Yeah, the talk that the Senate panel there, the CFTC and the SEC participated in recently was, I think, refreshing. Just with their background and their knowledge and their understanding that this space is still growing and you don't want to sort of put out the fire quite yet. But yeah, that makes sense. So I think now we will start opening the floor up for questions from the audience. So if you can just raise your hand, and we've got Ian back there who's got a mic, and then
All right, we got our first question.
Hi, this is in regards to the options conversation. When do you see realistically a time frame for that? 6 months, 3 months? I don't think that's proprietary. If it is, I apologize for asking.
It's something that we are discussing as we do kind of all new product designs. At this point in time, we really would like to see the futures get more developed. History has kind of said you need to have a somewhat deep and liquid futures market to be able to support that corresponding options product. I'd say, times and history has changed a little bit. We are usually more prone to introduce those option products a little bit sooner than we used to be maybe 10 years ago. So I wouldn't say it's probably that far off, but I wouldn't say in the next 3 months.
Hi, Julie. This is Joshua Herman. And I was wondering if you're looking into your products related to like the price of Bitcoin, maybe like its volatility, or product like that, maybe?
Yeah, good question. The thing that people often find surprising in when we talk about this is saying, Bitcoin is not actually the most volatile product that we trade. When you look at some of the emerging market currencies, when you look at something like our electricity contracts, those were things that, from a risk management perspective, our clearinghouse was able to go back and model and prove out of just saying, there were times when those instruments were far more volatile than what we saw with Bitcoin. So while we have, certainly set our margin levels very conservatively, we are very confident that we can manage something this volatile. I'd say Bitcoin is a little bit, the only thing that's unique about it in that sense is that we actually have hard price limits on both the downside and the upside, because, again, you typically would see those price movements to the downside with most other commodity contracts, and as you guys have all seen with Bitcoin, it doesn't care which way it goes either, and quite quickly. So it keeps us on our toes.
Hello. I was wondering, you spoke about potentially rolling this out for futures for other cryptocurrencies. I was wondering specifically at Ethereum, do you have a plan for eventually rolling out futures for that? And if so, what would your timeline be?
I'm just going to repeat just so we got it a little quiet. So the question is, Ethereum futures, are you thinking about that? Is there a timeline?
It is definitely, along with options, probably the top 3 questions we get from customers. I think there are a lot of people that say, Ethereum has, a much longer runway, maybe even than Bitcoin in the longer term. more flexibility. So it is something that we are looking at and evaluating in light of a lot of other product opportunities. I think it would follow most likely a similar path where we would put an index out first, just so that people can get comfortable with the index methodology, start some back testing with the reference rate. And again, I hope we would be in a position, to do that in the next year.
Hi, thanks for coming. The trend in the exchanges is towards decentralized exchanges with DEXs, cash exchanges. And recently, a few nascent initiatives have been announced in the future space because of the low cost of transaction and the low overhead. Are you at CME concerned at all that by embracing Bitcoin, you're kind of accelerating this trend that may put yourself into a side of conflict with these new nascent exchanges or with the technology in general?
I think competition is good. I mean, I think people coming to trade at CME are probably looking for something different than people that are going to some of those other, nascent opportunities. For us, we felt we could have sat there and watched someone else do this and be a fast follower. But the belief, and again, among the management team was, we're the ones that are best equipped to be able to provide risk management around that. So I think, others are probably going to come out with, different products and do that faster and maybe have lower margins and maybe charge lower fees. That's just not a game that we're going to get into, and we really want to be the place where people come for price discovery and to hedge their price risk and to do it in a trusted environment. But again, I think like with most things, other alternatives are not a bad thing, as long as people are doing it, with good kind of sound business reasons and regulation. I mean, I would hate to see some things spark up that are not following, the necessary standards, and that would be my only concern with some of those opportunities.
How you doing? My name is Mark. I'm actually in town right now, so it's nice to be able to talk to you. I'm curious what your views on this as an asset class. Ethereum is, like, a lot of these cryptocurrencies are utility based in their value and their scarcity and things like that. Of course, it's how blockchain is developing and where this ecosystem is going. And when you're considering other cryptocurrencies to put on the market, I've heard Bitcoin being compared to as the gold standard of cryptocurrencies, mostly because all on the exchanges you're using Bitcoin, a couple other currencies like Ethereum, Litecoin to trade against these other currencies. But I feel like you're sort of measuring the growth of the ecosystem overall. And when you consider adding cryptocurrencies to your new product lines, do you feel like you're, like kind of Lisa, you're accelerating this? How do you feel about what you're doing to the ecosystem? And when you're considering other products like cryptocurrencies and digital assets, like I've seen regulations kind of like holding against what is a utility token and what Cosby should consider a utility token and things like that. So we kind of want to see regulations like with a hands-on approach, and obviously you want to see more competition in the sector. So when you're looking at these assets, what do you feel, I guess in a personal opinion, where this ecosystem is going?
Yeah, I think you make a good point. I mean, there are plenty of people that were not, pleased to have an exchange like CME come and introduce futures, of saying, just leave us alone, we're just fine, and don't need regulation coming. I think it is emerging as an asset class. I think people are viewing it as such, but it's very early days.
I think market regulation is good. Having the futures markets, tech product prices is a good thing. But whether or not we have the government involved in how tokens are being regulated and developed, a whole other thing. But as far
this is a pretty comprehensive topic, and it might be better to do a one-on-one. Anybody interested in seeing these two talking? That's what they're talking about. Next question.
Thank you.
I have a follow-up on that. Yeah, Julie, so thank you for being here again. You mentioned, referenced a little bit earlier about the institutional market. Can you talk a little bit about how the institutional market for cryptos is evolving to some of the big hurdles that need to be kind of overcome further growth?
Yeah, we were down at a conference just last month, and it was interesting because a lot of the institutional investors were saying, this kind of feels like what people were saying hedge funds were maybe 25 years ago. And that everyone had, didn't understand what these people were doing, it wasn't transparent, but yet you see how accepted hedge funds are and how a critical part of any asset allocation that happens today. So I'm not saying this would necessarily take 25 years to develop, but I do think it starts with education. And, I know we found in our conversations, it doesn't matter if we're talking to a commercial entity, or we're talking to a hedge fund, or a buy-side client, they want to talk about Bitcoin. And largely, I think it was just the context of what was going on in the marketplace last year. I mean, for them, there was volatility nowhere else. There was nothing to talk about. It was everything on the news. And it was fun to talk about, right? It was a good polarizing topic. You could debate it over the dinner table with your kids and your parents. And, I
Love this dinner table talks about volatility with the kids.
It's good. I do that. But that is what I think kind of like created a little bit of this, obsession and hype that, we have never seen that with any product introduction that we've done. Probably never will again. And so for institutional investors, a lot of it is just around education, because they don't understand how any of this works. They don't understand how something could, just have value. But yet, how could you say, how did paper money just have value one time either, right? So trying to explain, beauty is in the eye of the beholder, and that they need to kind of bring themselves up to speed. And I don't think anybody is out there saying, a large percentage of people's portfolios should be allocated to virtual currencies. But I think what we are trying to say is that you should start to become more educated on it, because it's not going away.
Julie, thanks for coming. Given the fact that CME owns the clearinghouse and trades treasuries as well as equities in institutional asset class, can you comment on when you think people in this crowd post Bitcoin as a SEC asset in SCM?
As collateral, it certainly has been discussed. I would say there will need to be quite a bit of testing and infrastructure changes within the existing ecosystem that we have today. Our clearing members are not equipped to be able to transfer Bitcoin to us today. But you've already started to see other technology vendors, with trading technologies now saying that they are connected to Coinbase, and obviously they're a huge front-end trading GUI for many of the futures traders. I think it will develop. I think it's just going to take a little bit of time. I think security around that is a big thing, insurance a big thing, and figuring out how all that transfer needs to take place and still fit within our existing kind of processing times. That is something I think we'll continue to explore, and we'll work on some use cases with some of the firms to kind of test that out and see how it works.
Hi, Julie. Thanks for being here. I have a question regarding the margin requirement for the Bitcoin futures. So right now it's at 43%. Is there any future plan to cut the margin to reduce that requirement to increase the volume?
We would never margin our products to get more volume. Our margins are driven by the underlying risk and the profile of that contract. And what we really saw leading up to the launch, we had some significant price movements in the week before launch, and that prompted us to come out with slightly higher margins than we had anticipated. But we are constantly reviewing that. We have a team that manages all of that in real time. Will I expect, could they go higher? Will they go lower? That is really up to our clearinghouse staff to look at. But that's a critical part to make sure that our firms and the CME clearinghouse have enough margin to cover significant price movements. Volatility is certainly dampened since when we first launched, but it is something that we're constantly monitoring, and so I would expect there to be some change. Just not sure if that goes up or goes down.
Okay, so we're going to take just 3 more questions here, and you're going to be without the mic because Ian has run to get pizza. Ian is the all-star of the night. Yeah, actually, why not? I'll give you guys, but you got 3 more questions here. Start with you, and then.
Julie, the CBOT gave the S&P Mini to the CME years ago because they didn't think it would go anywhere. Why not do a Mini, one, and it allow people to do the spread?
That is, another product idea that we are talking about. I would say, mini contracts, in some cases, the E-mini is the most successful mini contract ever introduced. We've done some smaller micro-sized contracts on FX that have really not been successful. So I think it kind of just depends on, the product itself, making sure there's, enough activity that we're not fragmenting the market as it exists today. And since it's still pretty young, pretty fragile, we'll be introducing a new market maker program on the existing contract in early March. So we're hopeful that continues to drive even more liquidity, and then we will look at other product extensions like minis and options going forward.
Hi, Julie. Thank you for your time today. I was wondering if you could comment briefly on your findings on the prevalence of market manipulation from Bitcoin whales to the correlation between January expiration dates and the large drop in price, and what you have found on the prevalence of any market manipulation in the underlying asset.
Yeah, so the question was around market manipulation and some of the events that have happened since January, and what kind of impact or maybe what views CME had on that. I can't speak from our regulatory team's perspective. They are a separate unit, and they may have investigations going on. I'm not privy to that information on the business side. I will say, as we monitor the index, and it is our job to monitor the index, ensure that there are ample transactions going through that index, that for both expirations, we did not have or see any issues with that. Things expired as expected. They were within what we had anticipated in that regard. So this is one of those things where we're creating a reference rate based on forward exchanges. We still see a fair amount of price discrepancy across those forward exchanges at any point in time. What our index methodology does, though, is taking out the highs and lows across the prices that are being received. They are all based on actual transactions that are taking place on those spot exchanges, and also eliminating things like maybe large trades that took place on those exchanges that might be slightly off market. So it's not to say there might not have been market manipulation, going on even in some other exchanges outside the 4 that we use. But for us, we're pleased with the way the 2 expirations have gone so far.
Thank you.
Okay, as we're going to take
pizza time.
we're going to take one more question here, and then we're going to head back for some pizza. So.
Hi, thank you for coming. I was wondering if you, especially in this CME, have you guys embraced using blockchain technologies within the actual infrastructure of the market itself?
I'm sorry, can you repeat that?
So the question was just, have you embraced blockchain technology within the market mechanisms themselves, or are you just interested in trading cryptocurrencies?
Definitely both. Well, I say that we have, we're like many companies, I'd say, in the financial services space, we are, experimenting. So I think the interesting thing for me is the technology is actually the easiest part. For us, as we've done some existing use cases and have some being planned underway, The financial industry has just a lot of infrastructure that you have to work within. And what we've found is really needed is to develop use cases with the intention of putting in production, but doing it with a pretty large consortium of actors. So other clearing firms, other clearing houses, asset managers, other people that are existing customers, so that we can get all of those perspectives. I think that just takes time, as those, we need to get all those actors to kind of agree to what problem we're going to solve. But we definitely have a team internally, has, works on developing their own patents around this, looking at where we can apply this to our existing business. And I find that all very exciting, and for us, I think that's going to be the biggest impact to the financial services industry over the long haul, and that's what we're just starting to see some investment around.
Awesome. Well, with that, I think we'll wrap up. But everyone, please give Julie a round of applause. So everyone, pizza is ready to go. Just a reminder, we have the space until 6 p.m. And so mix, mingle, enjoy yourselves. And thank you again for coming. We will have more meetups to come in March and April. So thank you.
I started on the floor. I was in investigations. But that's GOT.
Fun.
Yeah.
That guy who also passing, he left his cell phone, so he may come back. I just give to you. Who see the no problem.
We were doing good things then.
Well, my guy.
Brian Durkin? Yeah, I worked for Brian. And,
Oh, really?
He's been a great person. Yeah, he's our president now, so he's been our boss for years. Thanks for coming. Nice to meet you. Yeah. Great. I don't know about that. Nice to meet you. So what do you Yeah, that's cool. So there's a lot of interesting travel then? Yeah. Seriously? Okay, cool.